So what we're doing is we're looking at the NASDAQ 100, and we're going to look at a supply and demand trade. I like to trade with the institutions, smart money concepts and order blocks and liquidity grabs and this and blah, blah, blah. It's actually real. If anybody's telling you to ignore those, then they're not your friend, and you need to run away from them as fast as possible because they're going to lose you a bunch of money. The only way to predict where market is going is by supply and demand. There is, in my knowledge, there is no other way. So anyway, so we'll talk about what a supply zone is. And just for the record, supply and demand zones create support and resistance zones. So support and resistance zones are lagging. They're in the past, just like an RSI indicator lags. It's not going to help you in the future. It's just a probability. Supply and demand zones are not probabilities. They are what they are. If you learn to trade these, you will be profitable. Your percentage rates will increase. And I'm just going to say it like that. Anyway, so we're looking at this. Obviously, you don't see any of this forward crap, but you're looking for a specific set of candles. And here's one right here. This actually was, I don't have colors on, so I'm going to think this is a rally base drop. And this would create a supply and demand, but it's just this little thing right here. But this is the trigger. So basically, I draw my zone from the trigger. Hold on. So the trigger is this big candle here, this big push. This is a big push. Lots of pushing, lots of power got pushed into this candle here by somebody, some institution, government, banks, whatever. It doesn't matter, or a bunch of them all at once. Who knows? But the previous candles where you draw your zone. So you look to the left where it started, and you want to go. I just draw the whole candle, but what's important is the wick right there, and then you draw your zone across, and now you have yourself a supply zone. Price is going to come back to this, and repeat, and rinse and repeat. Yep, that's what it is. Anyway, so how do you trade this? You can be good and sit here in front of your computer and stare at this all the time, or you wait for something like this to form, you notice it, and the way I trade it is I put a pending order right underneath here. Sometimes it doesn't all touch the zone completely or go into it, so I put it, some pips in front of it, pending order short there, and then my stop loss goes directly above the zone. And there's a couple ways to trade this. You can trade the whole run, but you do need to pay attention to when the demand zone is created so that you obviously don't come all the way back up here and just break even or go into your stop. So you want to make money. So that's the point. And if you notice, this is a supply and demand zone. 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 There's supply and demand zones within the supply and demand. And then if you go to the 4 hour, there's a million supply and demand zones within the supply and demand. So it's just how the market's moved. It's how things go. It's just the way it is. But how I trade it is you can short it, and obviously you can target your previous low. You can just have a running stop loss or a trailing stop loss, or you can do what I do, and I wait for it to create the demand zone, which is right here. And there was an abrupt about face here. So this became the demand zone here. We're going to draw it, big one. So we're going to draw just like that. And I would close my trade, my short up here. So if you traded the whole thing, you're basically looking at By the time you notice this happened, you probably, to just be realistic, you're probably around here. So that is a, that's in, this is NASDAQ, so 458.21 pips, or 45,821 pipettes, which is what we're paid on NASDAQ, I guess. So it's a big move. The RR is 5-1. And then you come to your demand zone and you do the same thing. You notice your demand zone, and you would notice it, somewhere in here somewhere. There are indicators for this stuff, so you can get alerts and all that. And then you would take your pending order, put it right above it, change this to blue. Oop, wrong one. And then we would move our stop loss directly underneath the zone. And then when it comes down and triggers it, you're in a long position, and this one's simple for your take profits. So you set your stop loss and this and that, and you literally just take profit right underneath the supply zone right here, and it hits right there. And this would have been a 4.91 RR with 434.35 pips of NASDAQ 100. And obviously when it goes and it takes off, I move my, stop loss to break even. And then I let it go. And that is a supply and demand trade. It's really that simple. There are indicators that will let you know when these zones are created. You can, the way they work, they usually lag, but the majority of the time you're going to get this retest back into it, testing it. And the reason that happens is you have an institution that pushes price down. We'll just call it institution. We don't really know who it is. It could be a group of institutions. It could be governments, could be who knows what it is. So they push it down. They're selling off their buys from here, which is what shoves it down. And then everybody's still entering buys because they think that it's going to continue going up. So it retests into it. Well, they protect this zone. They have the funds, and they shove price back down again because they want it going down. They want to continue selling off their positions pushed up here, because it does not work for them like it does for us, where we just have a few positions, we're buying and we click close and it closes. They got to have the liquidity. They got to have the buyers in order to sell their positions. So they need everybody to keep buying so that they can keep selling. And their volume is obviously a lot higher than ours, so it starts to drop. And that's the reason this happens. How I understand it anyways, but I don't really care. I just care this zone gets created. It gives me an opportunity to get into a short. I short it, and the goal and the objective is to wait till it gets to the demand zone and rise. But you can trade these individually as well. So you can short it, target, previous low, and so you're shorting, and you're coming to your previous low right here. And then, take profit hits down here somewhere. And this type of trade would take 4 days on the 30-minute. Now, this happens on all time frames. You can use all time frames. You don't have to use 30 minutes. You can use whatever time frame you want. But the 30-minute, I like it. It's kind of passive. You don't have to stare at the screen a lot. And then what you do is you wait for this to rise again back into this. Well, honestly, you could enter a buy anywhere in here and just have your stop loss below this previous low, this next previous low, and target this zone here. So, say you don't get a perfect position. There it is, because, perfect positions don't exist. Our stop loss is targeting this previous low here, and we are targeting not this. This is a distribution phase right here, this consolidation. That's not what you're targeting on this. You're targeting this supply zone that was created right here. See this little guy? So this is your supply zone, and that's what you would target. Now you're saying, well, I could have got all this too. You could have, yes, but I don't know if this is going to do that. You know what I'm saying? I know it's going to come back and retest this right here. Look at, see this jump? This could have been your profit right here, and then it comes down and drops down behind this. Sometimes it does make a higher high than the previous supply push, but not always. So I don't use it as a target. I will use the bottom of this wick of this candle as my target, and I'll go a couple pips below it just for slippage and whatever else, and that will be my target. It's still a good run. It's 2-to-1 RR. It's 147.9 pips. And the time that it took to take this trade would have been 10 hours. So that's a good day right there. If you want to, day trade this whole run down. And if you do that, that's fine. That's how you compound your account, at a higher rate. But you need to pay attention to the bottom when the bottom forms, which is your swing. I call it the swing order block, and know when that's happening. And it's typically, like if you see here, it's a big push down, and then it just does an abrupt reversal. And then this candle that created this, which is the previous one, you draw your zone on that like I had, and that's what you use for your touches. Coming back. I guess you could use this wick here, but I like to know for sure, so I put it here. You just go into a little bit of drawdown. It's not bad. But if you break this zone here, then it's failing. It's a failed order block, and it's not going to go up. But then you can trade these on a daily right here. So say you saw this, you get into this trade here. You set your stop loss there. What I'm going to target is I'm going to target my supply that was created over here and go right there. And then we hit take profit, and that's 2.38 RR, 223 pips. It's going to probably be another 10 hours. Let's see. So it's triggered right about here. And so that's 1 day. That's a 1 day trade, which is fine. And then, I'm going to wait. So you can trade all these too, because you can pop into the 15-minute and look at what's going on inside of the 30s. Where did my stuff go? There it is. And you can find entries down in here, go down to the 5. Just as long as you got your zones drawn, you're fine. So here's another little supply and demand run that happened right here. So we came up, turn around, about face, and we're going to draw our zone off the candle that made it happen, which is not that one. It's this little guy here. And we would short this and target the previous high right here. So we would get, and then obviously our stop loss going to go right above it. And there we go. And our previous high, right? Yep. So right in there. So that's a day trade right there. Intraday, you're getting 34.27 pips for 3,747 pip bets. And with a 3-to-1 RR, and the time that it would take to trade this would be 5 hours. So that's a pretty good intraday trade there as well, but it's not over there. So once it hits, you can trade going up and target the supply zone again. I see everybody's like target the previous high. I guess you could on this one, but you wouldn't know that this was here. So I'm going to play it safe. I'm targeting the supply zone and a couple pips below for any type of slippage. And there you go. There's another 1.57, 34.62 pips, or 3,462 pipettes. And then you notice another supply zone is created on when you take profit on that one, which this is no more. So we'll get rid of it and we'll draw else our other one here. Come across, voila. You ride this down. You notice your demand order block right here because of this big, huge candle that's engulfing this previous candle here. Here's your order block. So that would be your take profit from this right here, but obviously you wouldn't know that's coming. So I would just target from here. I would target the previous low over here. And there you go, you hit it. And this is created an order block. So it's creating a demand zone, goes hand in hand with supply and demand as order blocks. And I would target, obviously, you go for, see, this did not pull back all the way. So you couldn't use your pending order strategy, and it always doesn't happen. So you might miss this trade, but say you were sitting here watching it and you saw this happen, you would probably target this candle right here as it closed, and then you'd put your stop loss below the zone, always below the zone, and you target just a couple pips below the supply zone. Moving my crap around, and then we wait, and it hits take profit. And again, this is 1.59 RR because you had a bigger zone here. This was a big candle. Just happens, not something you can do all the time. And that would take, where is it? 12 hours for that. And it's 68.64 pips with our 6,864 pipettes. On one lot trades on NASDAQ like this for us, small retail traders, that's a huge amount of money. That is, I believe it'd be $6,800. So that's a big trade, and I might be wrong in the math, but that's a big trade. But again, these are the intraday trades. My objective is to, me personally, so I don't have to stare at the computer, is to trade we want that, is to trade all of this. So I'm looking to go from here, take profit, to demand zone here. Probably wouldn't get it all because I probably wouldn't notice it. So I'll probably get out about there, and let that run like that. So kind of swing trade it a little bit, and then find my entry here to come back up if I notice that a demand zone is coming up here. So you can trade the inner part of this to compound accounts better. So you have something to do every day, but you can do this with this pair and then go to the next pair and find your zones, create your alerts, and wait for them to form. But that is how the market is pushed around. That's how it works. Like this is a supply and demand zone here. This is a small and supply and demand zone here. This is a supply and demand zone, right? Let me find it. Right here is where it happened. There was a zone created here too, but it failed on the rise back up to it. So you'd probably end up trying to target that over here. So would I, and then it would drop down and I would just close the trade. But that is how I trade supply and demand. The trick is gaining the experience to understand how the zones are created, seeing the zones, and how to act on the zones. But anyways, if you would like to get some free signals in on supply and demand trades, join our Telegram. It's in the description below, and you'll get some signals. Anyways, thanks a lot.